On January 7th, RFK Jr. just flipped the food pyramid. Here are the three stocks to buy now that are going to benefit bigly. The era of big food dominance has just hit a brick wall, as you can see by this big, beautiful chart of Kraft Heinz and Co. here. Just hit a fresh 5-year low off the announcement just last week. This is beautiful to see. This is truly capitalism healing itself with a little push from the government. We love to see the government getting involved in capitalism now. On a serious note, this is not a political video, but I truly believe, think about our system here in the US. It's a triangle. And when it's working optimally, each tip of the triangle, here's what they represent. At one tip, you have government. At another tip, you have corporations, let's call it the private sector. At the other tip, you have the media. And when we have a big, beautiful functioning system, each of these three things check each other. They check the power of each other, similarly to, the three branches of government. But I'm getting off on a tangent here. But I do think that this is evidence of the government kind of pushing things back the right direction with these new dietary guidelines that we'll briefly unpack. I'm sure you guys have all heard about. But I think in recent times, the corruption, the grift, a lot of it has been enabled because these three things have been on the same side. They haven't checked each other. It's just been one big club, and we ain't in it. So January 7, HHS Secretary RFK Jr. released the 2025 to 2030 dietary guidelines. Let me pull them up here. Now, some of these statistics are just truly alarming, but this update to the guidelines is the most radical departure from federal nutrition policy we've seen in 40 years. For the first time in recent history here, we're actually seeing the government explicitly going after ultra-processed foods, added sugars. They basically flipped the 1992 food pyramid on its head, and it clearly wasn't working, right? Now we're going to prioritize whole foods, proteins, fats, because America is sicker than ever, and something had to change here. Over 55% of the American diet currently comes from ultra processed foods. And what's insane is that number is actually even higher for kids. I mean, you think back to like the school lunch we were fed, if you can call it food, that for the youth, that number, the percentage coming from ultra processed foods is more like 62%. And that's from CDC data from 2021 to 2023. So as I alluded to, the giants like Kraft Heinz, like your General Mills, they have a lot to lose, and the stocks are hitting fresh 5-year lows after this announcement came out. But there are three stocks we're going to talk about today that are perfectly positioned to ride this health and nutrition revolution. We've talked extensively about all three in many previous videos. They are Hims, Chipotle, and Sweetgreen. We're going to get into it today. So again, I'm not going to go super deep into like the bull thesis of each. I'll just kind of hit on each briefly. We'll look at some technicals, and we'll look at some price targets. But we've talked a lot about these. If you're interested in the deep dive, you can check those out. I'm going to keep it short and sweet today. So I think that these three stocks are set to do very well with these new guidelines. And really, these guidelines, to me, it's just the cherry on top. It's confirmation. Like these companies, we'll start with Hims here, they've been way ahead of the curve, and this is just more confirmation. But I really look at this guideline release as the cherry on top. This is not it's not central to the thesis. It's just yeah. So Hims and Hers, I think we're looking here at food as the new medicine. So the new guidelines have delivered a clear message that food, not pharmaceuticals, is the foundation of health. Well, that sounds like a threat to pharmaceutical and telehealth companies, which you could call Hims and Hers. I think it's actually a massive tailwind for them. And this is because Hims has largely spent the last 24 months evolving from a pill provider into a holistic health platform. Their recent acquisition of Tribe Labs is the missing link in this new guidelines era, because with Tribe Labs, Hims is now able to bridge the gap between nutrition and medication. It means you're no longer going to be guessing if your diet's working. You can actually track your biomarkers in real time. You can watch your cholesterol, your glucose levels drop as you swap ultra processed junk for maybe a higher protein meal, whole foods, the things recommended with the new guidelines. So I think that the both of these is for Hims is Hims isn't just selling you a pill, they're selling you a dashboard for your own biology. Now, if we look at the technicals briefly, I mean, this stock got destroyed in 2025. And I think that's our opportunity, right? The stock got as high as maybe $70. It's down quite a bit. And the chart doesn't look the strongest, but again, this is one I'm in for the long term. I really don't care if it turns around in the next 6 months. If it keeps dropping, I'm just going to keep buying. But I think that the $30 area is basically where it already is. It's sitting at just over 32, went up a little bit today. I think that's a strong support level. You can kind of go back and see that. And I think that these lows we saw back in April, these Liberation Day lows, call it around 24, 25. I mean, it's going to take something like that for it to get back down there. We're going to need another Liberation Day type event, which we could very well see this year. And again, I will keep buying. I have been selling some puts on Hims as well. So I sold the 20 put expiring next January. It's actually paying over $300 right now. So about a 15% return on my cash. My worst case is buying Hims at 20. I like that. I'd love to buy Hims there. And if not, I love making 15% on my cash in a year. So there's a lot of ways to play this. And I am also buying shares at the same time because I do think that this stock has immense potential. And we'll just get into the forecast right now. At $30, I really think it's a steal. I mean, you look at the analyst price targets, $30 is the low, average is 43, the high is 85. Now, if we break it down a little further, if we think about this, so for 2025, they're expected to do, let's call it 50 cents of EPS, just under. You slap on a 60 PE ratio, kind of where it currently sits, might even be a little lower after this drop here. Let's see. Hims stock current PE, yep, just around 60, let's say, roughly. So that gets you, about the current stock price. Let's call it at $30. And you might say, well, this company seems very expensive at a 60 PE, but I think that PE is just going to continue to come down, and you're kind of already seeing that in the forecast here. 2026, they're expected to do 18% revenue growth, almost 30% EPS growth. So let's just say that they did get up to 60 cents of EPS. Honestly, if they execute, I think they can do a lot better. But, as a base case, that brings the PE down to 54. So I think that this is kind of what you're going to see each year here. They have the growth. They have the recurring revenue. We've discussed this at length. And the PE will keep coming down. I mean, this company is really getting started. Their 2030 target is to do something like 6.5 billion in revenue, about 1.3 billion in adjusted EBITDA. So they're quickly on a path to, if you forecast out a few years, being very undervalued today. So I like it here, and I will continue buying as it drops. If we move to the next one, so next up we have Chipotle here. I'll pull up the chart. So Chipotle, company with ingredients you can pronounce. Now, this is wild, but if you would think about it, you can look this up. The average fast food burger contains over 80 ingredients. It includes absolutely disgusting poison, things like xanthan gum. Does anybody know what that is? And artificial natural flavors, whatever the heck that is supposed to mean. Artificial natural flavors. I always love to see that one. Chipotle has long committed to this 53 ingredients that you can pronounce. Another hideous chart we'll get to in a second here, although it's looked a lot better the last 7 sessions. Chipotle has been way ahead of the curve on this one. 53 real ingredients you can actually pronounce. You know what they are. They're real ingredients. It's become the company's greatest competitive advantage. So they've long marketed their use of roughly 53 real ingredients. It fluctuates by 1 or 2. Depending on the specials and whatnot that they offer. But the 2025 guidelines specifically named and shamed things like artificial dyes and additives, all the things Chipotle famously banned years ago. And now they've also recently launched a high protein menu option. So once again, they're perfectly positioned to capitalize on these shifting market trends. Their menu aligns with the federal guidelines, and they've just been ahead of the curve. This is a company that gets it. So again, another company that had a rough 2025, stock dropped quite a bit. But I think 2026, we're going to do better here. And again, I really don't care what it does in 2026. I'm buying this one for the long term. But you can kind of see, it's funny here, this gap totally just filled which tends to happen. Back in end of October, the stock just cratered from $40 all the way down to about 30, and it has now officially filled that gap. So I would expect, it's run a little hot here. I mean, to have 7 straight green sessions, I would expect it to kind of cool off a little. You could kind of see RSI's already just hovering just under 80. I would expect it to kind of stop and maybe trade sideways for a bit. It's another one that if it went back down, I would love to buy more. But I'm probably not jumping to buy it here at 40 because it starts to get a little pricey, just compared to other names like the two in this video. Like, I'd rather buy Hims. I think I'd rather buy Sweetgreen too than Chipotle here. But long term, I think that you can't go wrong. We pull up Chipotle's forecast. So, similarly, the low price target, basically where we sit, $35, average just under 50, the high at $65. Chipotle has had some issues. They have some headwinds, but it's small things that they can fix easily. It's not big problems. But this company is definitely more of a mature growth phase. And I wouldn't be surprised to see it grow at these expected rates, if not a little lower. Call it mid to high single digits for next year and for 2025. So forward PE looks a little bit better if we have a 32 PE for next year, let's say. But I do think that this one has kind of run hot. So I'll probably just hold what I have for now and wait for a pullback, maybe sell some puts lower. But if I didn't have any exposure, I would definitely want to buy a little bit here. So wait for these moving averages. They're going to have to catch up now. I wouldn't be surprised to see the stock kind of chill out for a little bit. That brings us to our third stock of the day, Sweetgreen. This company was once dismissed as a niche salad spot for the coastal elites. Today, it's looking more and more like the gold standard for the modern American diet. The new HHS guidelines demand nutrient dense whole foods and fresh produce. Well, wouldn't you know, that's the exact core of the Sweetgreen supply chain, which they source from legitimate farmers, local farmers, stuff like that, to bring you the freshest nutrient dense ingredients that you can probably find in a quick service restaurant. This one just got destroyed in 2025. It dropped quite a bit. I think it's down like 90% from its all-time high, which is pretty crazy. But you can kind of see it flatlined. It's been basing here since August in this, let's call it $9. It did get briefly as low as $5 range, but it's really been this like $6 to $9 range. I think that this one just makes a ton of sense. It's reclaimed all its moving averages. I will admit my one blind spot with this company is I have not personally tried it. I go to Chipotle all the time. It's fantastic. If anybody's eating at Sweetgreen, let us know in the comments below what you think of it. Would love to hear. I'm meaning to get to one, but the closest one is like a couple hours away. The chart is looking good. I mean, it's finally reclaimed these averages. I think this is, of the three, probably the one I could see running the most in the short term. Again, I'm not really playing that game, but the chart is looking good here. It's looking intriguing. I mean, Sweetgreen has short interest, 23% of the float. That's quite a bit. Could definitely see a short squeeze materialize if you get a couple dominoes to fall. And same thing with Hims. I think their short interest is around 30 or 32%. So I think that both of these companies could move in the shorter term. Again, I don't really care. I'm just buying them for the long term. Now, the one thing I was disappointed to see, I was a little confused by, was Sweetgreen. They just recently sold off their Infinite Kitchen, or Splice is the company that makes it. I think they got about 180 million. Maybe they bought it for 80 or 90 million. So they made a good return on it, but it just seemed, the way they talked about, like it had way more potential than that. And I thought that this was something that could give them an advantage. So maybe they'll give some color on that in the next earnings call, or maybe they really just need the cash and it just wasn't going to pan out to be as big as they thought. But the good thing is they still maintain the rights that they can use it in their own stores. That was part of the agreement. but they sold that off, which I thought was an interesting turn of events. So the bottom line, the recent dietary shift was inevitable correction, I think, for a broken, chronic disease driven system. For investors, the choice is clear. You can stay anchored to these legacy poison producers, the legacy losers of the center aisle, we can call them, or you can allocate toward the companies of the future. And I think saw this writing on the wall years ago. Him's emphasis on preventative healthcare, I think, makes it the perfect accompaniment to this new era of data-driven uh, this new era of data-driven nutrition, really, and the healthcare that will accompany it. Meanwhile, you have Chipotle and Sweetgreen. They're no longer just alternatives; they are the gold standard for quick service, nutritious food. And I think all three were unfairly punished by short-term noise in 2025, but they're now primed for a massive recovery as the entire U.S. food and healthcare economy realigns with their core mission, the mission these companies have had for years. Again, I think they've all been ahead of the curve. They continue to execute well. And these are three companies that I plan to stay in for the long term. If you enjoyed the video, don't forget to like and subscribe. Check out my Substack linked in the description below for deep dives on companies, and consider joining our community for access to all my stock and options trades in real time. I'll see you guys in the next one.